How to protect yourself against a housing market bubble. Like the stock market or cryptocurrency market, the housing market is prone to bubble formation. Sometimes, you could be making purchases without correctly identifying that you're in a bubble. In this video, we teach you how to protect yourself against a housing market bubble. Learn what to do in order to get the best value for money when buying houses. So before we delve into the protective measures needed to be taken in the midst of a housing bubble, it might be best to refresh our memories on some housing market fundamentals. Doing so will give us more than a surface-level understanding of these concepts and will help us defend ourselves better against the ever-changing market tides. And so, without much ado, let's jump into it. First off, what is a market bubble? Well, a market bubble or economic bubble is a trading situation in which the prices of assets are valued way higher than they are intrinsically worth. In addition, during a bubble, prices are adjusted based on inaccurate forecasts or inconsistent views about the future. A market bubble doesn't just appear out of thin air. Instead, there is a slow process by which it builds up within a market. Most novice traders are the fodder that helps the bubble grow. However, experts have signs they can look out for in order to identify a bubble. And so, how exactly do you identify an economic bubble? Well, there are a number of key ways. For one, you need to be on the lookout for new buyers. Usually, when new buyers flood a market, it's a sure sign that a bubble is forming. New buyers are an essential component of any market, sure. But when this growth of new buyers doesn't occur naturally and at a steady pace, then that's a sign of danger. Another way to identify a market bubble is to watch out for big bullish sentiment. Basically, this is a situation where people make you feel dumb for not purchasing an asset at a particular time. Those people in question have already bought into the bubble hype and are looking to get others to make the same mistake they did. Sometimes, they don't do these things out of malice. They have been victims of someone else's deception and believe what they are advocating for even though it may be false. A third sign to look out for in order to identify a bubble is skewed market metrics. As much as markets can't be predicted, there are still certain metrics which can be read in order to identify trends. In every other market bubble thus far, the readings have been off the charts. And so, if you observe such a thing, then it could be a sure sign that you're in a bubble. A fourth and final sign of a bubble is when people borrow to buy. See, the thing about a market bubble is that people believe they need to get in on the action. Supply and demand are so heightened that people throw all reasoning out of the window. Even when they do not have money to buy, they burrow just so they can make trades as well. Okay, so having covered all that, it should be a little easier to identify a market bubble now. These tips aren't perfect. However, with critical analysis, they should be of vital use to you. So, if you want to protect yourself from a housing market bubble, then applying these tips should be of critical importance. However, there's a lot more to do. The tips before can apply for the identification of any market bubble. This could be in the cryptocurrency market, the stock market, or the housing market. However, each of these markets has its peculiarities that distinguish them from one another. And so, even though the tips shared can be of use, you need to get a little more specific about how you use them. And so, when it comes to the housing market, you need to know where you can find data. The U.S. Association of Realtors releases sales figures monthly, and this can be a great resource to identify market trends. After all, nobody can purchase a house without a realtor serving as an intermediary. And so, realtors are a direct source of data collection. The U.S. Census Bureau and the U.S. Department of Housing and Urban Development also release sales figures concerning the housing market. These figures are more detailed and paint a better picture of the situation. Combining the data here with what the Association of Realtors provides can create a very complete picture of things. The data from these sources has been so simplified that even laypeople can have a good grasp of what's being relayed. As such, it's easy to read market trends. The data will be about a month old, and so it can't give perfect information of what's going on in the present moment. But by observing trends, you can have a pretty good chance of predicting what's going to happen next. If you're looking to buy a house and you identify that you're in a bubble, then it would be best to rethink that decision unless you have a pressing need. After all, the number one feature of bubbles is that they burst. When this happens, things do not merely go back to their original value, but could fall beneath value, presenting you with the best bargain prices. Bubbles usually don't last for more than 4-month periods, although this figure isn't absolute. During a housing bubble, the most important thing is not to cave into the pressure. You might face intense pressure from both purchasers and realtors alike to cash in. However, if you're able to stay patient, the rewards could be well worth it. Alternatively, you could also take advantage of a housing market bubble if you have some properties you are looking to offload. By selling in a bubble, you will earn more money than normal, giving you more financial security as other traders are quickly losing theirs. Coming to the end of this video, we hope you've learned much about protecting yourself against a housing market bubble. Shopping in a bubble can be a very dangerous financial decision, and so it's important to make sure to avoid this at all costs. In any case, to learn more, check out other videos on this channel. Until next time, have a good day.